Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Hey everybody, welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway. This is created exclusively for Mortgage News Network and brought to you by our friends at PRMG who are working for your best interest. So, rates did get a little worse last week, didn't they? But what's interesting is that on a technical basis, they hit exactly on the targets we had been outlining for you. We said that this was coming. Yes, we were a couple of weeks early in telling you this was going to happen, but it happened exactly as we had imagined. 2.92 on the 10-year. Mortgage-backed securities hitting the exact floor of support that we anticipated. And for now, they have stabilized at these levels. But you know, it wouldn't take much for the yield on that 10-year to get a little worse and hit our ultimate target of 3.04%. So we're close to it. We have to be careful because we could see a sudden jolt. The thing of it is that when if you took a look at our forecast at the beginning of the year, we had said that the 10-year Treasury would rise, but then it would kind of back off because we anticipated a pullback in stocks. Kind of exactly what had happened. Now that pullback in stocks is kind of almost over here as we see volatility kind of backing down a little bit. Earnings season we're into now, earnings getting a little better. That's supportive of stock prices, and as stocks start to increase, it's pulling money out of the bond market, and you're seeing the underlying weakness in bonds. Now, let's remember here, in April, the Fed has already started backing down, and they started really last week on their purchases of mortgage-backed securities and treasuries. You may recall they started this process in October when they said instead of buying $20 billion in mortgage bonds, we're going to, for October, November, and December, we're going to buy $16 billion a month. And then come January, they said, well, instead of now $16 billion a month, we're going to back it down for January, February, and March to $12 billion a month. And in April, it's supposed to have been ratcheted down once again to $8 billion a month. Now, last week, they were on pace for about a $10 billion a month buy. So I anticipate that they'll kind of ratchet that down further. And I think that interest rates, as we head to the second half of April, will have a rockier time. A few reasons for this. Stock prices look to me like they should get a little firmer. Fed, big reason for rates to struggle, buying less. The third is inflation. You've heard me talk about this. I think inflation is a bit on the rise here. And I think as we head into the next couple of weeks, you're going to see on May 1st, you're going to see a PCE, Personal Consumption Expenditure Report, that underscores the higher levels of inflation. All that is not great news for bonds. So I do think sooner than later, bonds, if you measure them by the 10-year Treasury yield, go towards our target of 3.04%. Bond prices get a little weaker, a little worse. It's a good time to warn your customers and tell them. Now, this doesn't mean the end of the world. You know, we get towards 5% on mortgage rates. You know, goodness, that is pretty much free money still. It's an extraordinarily low rate. We had a circumstance with quantitative easing that caused something that you just don't see over recent years. So we're kind of unwinding that and getting into a more normal marketplace. But even under normal circumstances, if you compare it to other normal times, rates that you're experiencing now are extraordinarily low and provide a great opportunity for housing, which, by the way, we did get some reasonable housing news last week. But this week, we're going to see lots of housing data. Count on us to break it down. And if you really do want the breakdown, you really want to navigate through these waters for your customer, why not get on MBS Highway? Look, if you want to really be an advisor, you need to get on the product. Talk to you next week. Bye-bye.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.
This is Mortgage News Network.